Welcome back to our part two of our video series for this week. In the video series, in the video part one, basically we covered the news headlines impacting the real estate market and also the TREB market data for July 2024. In this video, we'll cover the weekly GTA market trends, ground reality, and mortgage rate changes. So, in case you have missed video number one, please go back and watch video number two. So without further ado, let's deep dive, right?
Yep.
Okay. Sen, you want to take it over?
Yeah. So this is what we have. We are covering the area under GTA. So the GTA, some audience may have some confusion regarding what is covered in the GTA area, right? So
Right.
Greater Toronto area, where here you see we have different municipalities like the different sections. The areas that we are covering is Halton, Peel, City of Toronto, York, Durham. Yeah, so that's what we have. That's what we are covering under GTA. Yeah, so and you see different pockets in different areas that you see in the in the map that you see here. Okay, so if you go to the weekly trend for this area, we are seeing not major changes actually, but yes, we have seen some uptick in the active inventory. I mean, the current inventory in the market. Basically, we had seen that in the towards the end of June or the beginning of July. We thought that the inventory got peaked out, but again the last couple of weeks we are seeing that slowly it is going up, the active listings that you exactly see in the blue line in the graph. And if you see the new listings, that is again aligning with the same. We are seeing some a little uptick in the new listings as well for the last 2 weeks. So if you see the week of 28th 28th July, it was the new listings. I mean, then we got the new listings of 3,498, and in the week of 4th of August we got 2,953, and the last week it was around 3,181 new listings came into the market. But if you see the transactions, the sold data, that is what we are surprised to see that we are still hovering around 1,000 transactions around. So exactly the last week we have had 1,043 transaction, but the previous week again 1,028. So the transactions, the sales are coming down a little, not a significant change. Again, the active listings is going up a bit. Again, not a significant change, but the market is not improving, is what we can see based. I mean, we were expecting that, after the rate cuts, there would be some uptick in the market, but we are not really seeing that much. But we would get the ground reality from Max. So Max, what do you see? Is it the same that you see in the ground, or
Pretty much,
do
yeah.
you
I
do
mean,
you
it's aligned.
foresee any changes?
Yes, no, when the ground reality is pretty much aligning with the data. Like we previously discussed, even though we got 50 basis points rate cut consecutively, um, there is still fear in the market in the buyers, especially with a lot of delinquencies going around, and people had a lot of assignment sales was through the roof, where people was unable to close on the property. So all these lingers around in the marketplace, and the buyers are more conservative now compared to previously in the COVID time, where they would go and buy because money was cheap as well. So the last thing, so there is, even though there was a 25 point total 50 basis points less, it takes some time for that market confidence to come up.
Right.
So that is one reason why I feel the sales has been pretty much low. And then secondary thing is it's summer, so typically it's summer period, transactions are less historically because people are busy barbecuing, traveling places. That could be one reason.
Right.
So, and then hopefully, if we get another rate cut in September, and then around the fall we get another one. If we have around 100 basis points down from 5 to 4, I think there should be is uptick in the market.
Mhm.
Especially the buying power will go up for the buyers, and then that will, once that rate cut kicks in, people need time to see, run their application and see what they qualify for, and and then they know that this is how much they can buy, and then they slowly start buying. So it needs some lead time to really reflect a rate cut in the marketplace. But
Okay.
yeah, so that's what that's what is happening in the marketplace, and hopefully things get better. So
Oh, yeah, that helps. So let's see how things are going. So this is what we are seeing in the weekly trend, and if you go to the mortgage rates, I think we are having some good news over there.
absolutely, absolutely. So yeah, so basically the rates here, we cover the popular terms in this, and we
Hmm.
got a rate cut in July. Great news. So our prime rate is at 6.7 now.
Yeah.
So here, when we compare our previous week, basically those color coding means if there is a green, there is a reduction in the mortgage rates. Yellow means there is no change compared to the previous week. Red means there is a rate hike, rise in rate. So if you look overall, it's only green and yellow, which is good news. So if you look
Mhm.
at 5-year fixed, it came down from 4.69 to 4.59 for insured, and for insurable, it came down from 4.89 to 4.69. However, for
Mhm.
uninsurable and refinance, it is still at 5.04. Now,
Okay.
the fixed came down because of bond yields, came down, right?
Right. Right.
Uh,
Right. Yeah,
so
you
yeah,
already mentioned that. Yeah.
yeah. So that's the reason why we are seeing reduction in the fixed price. Now,
Okay.
the variable is what impacts when the prime rate changes. So basically, yes, compared to previous week in the insured area, we have prime minus 1.15 now.
Hmm.
Similarly, for insured and uninsurable, it's still holding same as prime minus 1.05 and prime minus 0.86.
Yeah.
And for 1 year fixed and 3-year fixed, there's a reduction. Obviously, impact of bond yield coming down. So there is a change in those rates.
Okay. Okay.
So the reason why we want to share all these things is if you guys think that if any of these rates you think you can qualify, or you think you need to check if you qualify, reach out to us. We'll be happy to connect you with our mortgage brokers, and they will run your application. Obviously, these are posted rates. Your rate depends upon your credit history, how much down payment, plus your work history and a lot of things. So they do a separate underwriting, calculate your risk, and provide the best mortgage rates. So that's how we do it. So yeah,
Okay.
anything else, Vincent, you need to add?
No, no, we are good. I think good that we are seeing a lot of green highlights here. We need to see more there. Yeah.
Yes.
Okay. Okay, sounds good. I think that's a wrap off, right? I think we covered what we wanted to.
Yes.
So yeah, I think we will see. We will see the inflation print is coming in August 20th. So, and if there is any other news, that is really impacting real estate, we will release it. We'll discuss that. We'll review it with Max, and get his advice, and release it in our channel. So please, continue to watch our channel, our videos, like, subscribe, share with your family, friends, especially who are there in the market currently. These data would, definitely help them. And also, Max is here to, help them out if in case, they have any specific questions or anything, that he can help with. So yeah, so that's all, Max. Maybe, we will see in our next video.
Absolutely. Again, thanks for watching our video. Like our video. Let us know your comments. Share it with your family and friends. If you have any questions, anything that we need to cover, let us know. We'll be happy to do that. Yeah, enjoy your rest of the summer, and hope to see you soon in our next video.
Yeah.
Yeah, take care. I'm Max Thomas.
Myself, Vincent Matthews.
Stay safe.